Great. Thank you guys for joining us today. I wanted to first take the opportunity to say welcome to a panel that hopefully the discussion will take us to a place understanding a bit more about venture capital. We have the pleasure and privilege to have three women of color to participate in this panel. That's a very unique experience. As you'll learn, the industry is very candidly unkind to both women and people of color to manage capital. But I think we have three that will be very helpful in helping us understand more about the industry. So I want to start first with a brief introduction of the panelists, as well as, more importantly, the things they do from a fund perspective. So I'll start with you, Monique. Tell us a little bit about what you do at Rain.
Can you hear me? Yes. Good morning. I'm Monique Idlett. I am the founder and general managing partner of Rain Ventures. We're a seed stage investment fund specializing in consumer tech and enterprise SaaS with a lens on diversity and people of women also.
Dami?
Morning, everyone. Can you guys hear me? Okay. I'm Dami Osunsanya. I'm the co-head of the SoftBank Opportunity Fund, a fund focused on Black and Latino founders in the U.S. We do early stage and growth stage, and we focus on tech-enabled companies that we think will change the future. Good to meet you.
Hi, I'm Lenore Champagne-Byrne. I'm the founding managing partner of Bright Ventures. We make pre-seed and seed stage investments in companies in fintech, digital health, and the future of work through the lens of inclusion.
Thank you very much. And as I said before, this is a unique opportunity. We don't often have the opportunity to have women and women of color venture capitalists. So, Monique, I want to start with you. Why did you become a venture capitalist? You obviously have done an awful lot. You could do an awful lot of things, but why did you settle here?
To change the world. Being an entrepreneur, being a successful entrepreneur, I saw myself in this perspective of what can we do to change our future as Black people, not just locally, but globally. And our nation's GDP is almost 70% of venture-backed companies, but less than 1% goes to people of color for funding. So therefore, we can only change and close that racial wealth gap through funding to create more billion-dollar companies for us so we can have more rich lose in the world.
Thank you. Dami, one of the things that seems to happen, and I think you guys have probably experienced across the board, I know we certainly do at New Voices, when you have the opportunity to raise capital, the question often is whether or not you're doing it for almost charitable purposes, or are you looking for opportunities to generate superior market returns? Is there alpha in what you do? From your description, I know you focus on diverse founders as well. How do you address that question of whether or not there's a real market opportunity here, and is there special sauce in generating returns?
It's an excellent question because oftentimes when people hear diversity, they think impact or they think nonprofit. And the way we've taken it is thinking of this as a undervalued asset class. So just like a few years ago, people were ignoring AI and you should have got in early because it's a new technology and it's going to change the world. We believe that overlooked founders are an undervalued asset class, specifically Black and Latino founders who often generate more returns for their companies, have higher impact, and are able to create more successful companies. So our mantra is we want to show that there's no trade-off between diversity and excellence. So the goal is generating outsized returns by betting on Black and Latino founders.
As a culture, we need to understand that we are for profit, not just charity. And the sooner we as entrepreneurs understand that we're for profit, the sooner it translates in the way that we do business as well.
Agreed.
Thank you both. Lenore, let me ask you this question. One of the things that has certainly occurred over the last 18 months, we've seen a very different economic climate. Things are different both for founders and funders in terms of how they look at opportunities. How has that changed for you? How do you look at the impact of that on both diverse founders and funders. And in thinking about solutions, how do you think about changing the impact disproportionately, candidly, to people of color, both from a funding perspective and founders?
Yeah, this is a multi-layered challenge, right? We are already in a super minority in terms of who's managing capital. So when diverse fund managers have a harder time raising capital, that is going to create additional fractures in the market. And that's already laid over the fact that we don't live in a world where products and services and systems are really designed for us to thrive. As Monique just alluded to, venture capital has the potential to change that, but not if we can't get funded at the fund manager level and at the entrepreneur level. So in this moment, it is critically important that we're having these conversations, that we're coming together, that we're creating networks of both capital and access that will pave the way for more diverse innovators.
You know, I think that we also have to help our entrepreneurs understand the art of collaboration. We need billion-dollar companies. That requires $100 million in revenue. Like, we have to start understanding that concept. It's not okay to just think of, I want to have $1 million in sale. No, we need billion-dollar companies, and we are capable of it because we spend trillions of dollars.
That's a great point, and I'm going to pick up on that. And Dami, on that point, how do we think about scalability of diverse businesses? Because Monique mentioned it's important for us to not just be able to fund the seed round or the A round, but to really be able to scale businesses so that we have opportunities to have less than, I'll say, episodic moments like a Richard Lou Dennis or a Reg Lewis or anyone else like that. How do we make that more consistent? What are the scalability elements that are going to be important here?
We look at it from a few different lenses. I think the unique thing about our fund is we've now spinned out. We are now called the Open Opportunity Fund and taking LPs, et cetera. But SoftBank being that first LP really helped us think about scalability very early. So what happened is we would have early stage founders who raised their seed round, and we said, okay, how do you become a unicorn? And the response to my shock, again, some of the most amazing Black and Latino founders that you guys know, no one's ever asked me that. I said, well, how do you think about IPOing? I know you raised your A, but the goal is to get you public. And I think as fund managers on this stage, we can do a great job of pushing our founders to think outside the box, as Monique just talked about. I also think it's important for there to be more funds that focused on not only early stage, but growth. So our fund is really unique in which we were a $100 million fund. Half of it went to seed and Series A companies, but a lot of it also went to Series B+. So our goal with those founders were for them to, one, mentor the early stage, but also push them to become actual vision fund portfolio companies, which is more Series C+, and then also go public. So I think funding more fund managers that focus on growth stage investments and pushing our founders to scalability is the way to go.
And Lenore, and I'm going to ask all of you this question. We've been talking about, in part, impact on funding diverse companies and founders. As I think about, really, in part, the reason we're here is you guys also run businesses. You're also dealing with the same challenges, candidly, that the portfolio companies that you invest in are dealing with. You have challenges in raising capital. You have to manage your infrastructure. You have to deal with a lot of externalities, some of which in your control, most not. How has the current climate changed the way that you are approaching your business? So I start with you, Lenore.
To be candid, in my business, I think I've always had a really deep focus on collaboration and having people around me who I deeply trust. Also knowing what I'm really good at and making sure that we have coverage on my blind spots. And so that hasn't, I would say, changed at all, given the market environment. However, it has become more important. So in a moment where there were bank failures, I was on the phone with trusted other solo GPs with similar fund sizes, comparing notes and talking about how we would support our collective portfolios. And that's the kind of collaboration that I think is going to be really critical. Sharing information, sharing resources for our founders, I think, is the absolute best approach in a moment like this.
Dami?
So one thing that we've done with our founders is focus on profitability. I think that we all got extremely comfortable and excited for the past 10 years where there were essentially no downturns. And it was growth at any cost. Well, now there's a cost. You will run out of cash, and there might not be someone on the other side to come get you. So we've been pushing our founders to focus on profitability. Also, we've also seen this as an opportunity. We know, based on 2008 and the other tech bubble of the internet bubble, that this is when the best companies are going to be made. So we also are on the other side encouraging people who are thinking about entrepreneurship to truly consider it, because when resources are strapped and there's not a lot of cash in the market, you have to think more creatively, you have to think more prudentially and be more responsible with the cash. So we've been excited for what's to come in the coming years.
Thank you.
I think adversity is not new to us, and I think that the way Rain Ventures has always approached venture and investment is from a perspective of get to cash flow as quickly, get break even. Let's get to profitability, because at the end of the day, we've always had to operate with that. And taking venture money is not for proving your concept, it's for scaling. And when you help founders understand that, you help them tighten up early and get to what their business model is and prove that it's actually something that you can have a profit around. And so, as they both said, it's about the access of all of us supporting each other, which we do that really well. We collaborate a lot. Places like this, the Global Black Economic Forum, this is where our conversations matter, and this is where we see each other, and this is where we solution. We talk about these things that create the solutions. And so I think this is a collaborative effort, but for any founder, get to profitability so that the cycles we go up and down all the time. It's, you can't predict that, but what we can predict is that we always have adversity, and we have to problem solve in advance and be preventative.
Thank you. Let me ask you all a question. Another thing I'm sure you're all dealing with, we certainly are at New Voices. Given the current climate, many companies are experiencing different types of economics, to your point around profitability. If you weren't kind of on that trajectory for profitability prior to what's going on right now, it's a challenging moment right now. How do you look at your portfolio in terms of managing the companies that you will continue to support and maybe some very difficult decisions to make about companies you cannot support because you're a business, you have metrics, your capital providers want to see returns. So how is that process working for you? And I'm always curious to know how you execute the no's. How do you tell a company no, and how do you tell a company you've already had a relationship with that you can't go forward?
So, when I built my label in the music industry, I had a different perspective. Fewer artists, all platinum. So we didn't approach Rain Ventures from a perspective, well, two will win. We approached it from the exceptional founders, build with the best, and we all need to be successful. So we don't go into it with one of them's gonna lose. We go into it, we're all gonna win. And I think when you have that perspective, that does create an environment for your founders to think successfully. And yes, are there times where we have to say no to follow on capital? Yes, but they understand why, and we still have to do our mandates and our thesis. So when you allow founders to understand what your thesis is, they have to continue to work under that, even after you invest in them, and that is the mandate. And so when you keep that integrity between founder and funder, then it's really a win-win.
Yeah.
You still help them, we still help them, right, ladies?
Yeah, I would totally agree with that. I think it's really not about having the conversation in the moment that you're saying no. It's about having all the conversations prior to that. And so we have never arrived at a no that wasn't transparent and clear. It's also about having the groundedness as a fund manager to communicate your own business model and your own priorities to your portfolio. And that's an absolute priority for us, especially because we highly disproportionately back founders who have been overlooked, to be over-communicative about expectations, to be supportive in education, and to make sure that they have the resources they need to navigate whether we follow on with capital or not.
Dami?
So for new companies, it is an interesting dynamic because we have a form where everyone can fill out. We don't believe you need to have a special relationship or have a special intro. We know sometimes VC seems very mysterious, and it's like, how do I get to that fund manager? So we get a lot of incoming, and I think a lot of founders think it's still 2021, that they're gonna I call it 2 guys or 2 girls and a dog and a deck, and they're like, this is a $25 million valuation. So we have to sometimes get people to reality on why that's a no. But to these ladies' points, we're being very transparent on the fact that we also are looking to generate outsized returns, and that we're looking for outstanding founders. On the portfolio side, it is really unique because while we can't invest in every follow-on, we're transparent that every follow-on investment is viewed to us as if it's a new investment. So you're constantly competing. So just because we invested in you a year ago does not mean that we'll invest in the next follow-on, because it depends on how you did versus your metrics versus what you said you would. So being transparent with founders in that first onboarding call is extremely important. And then besides that, we have a value creation team, which I lead. And while we may not be able to give you capital, we'll give you customer intros. We'll connect you with our amazing Sky Blue Media team, who's like rocked the house for our founders and getting connections and being able to be amplified. And then we'll help you even bring in angels, right? So sometimes you may not be ready for a next round. You may need a bridge round. Yep. So we have Miami Angels, we have Black Angels Miami, other angel groups that I connect them to who have a higher risk threshold that might not, that will be likely to invest in these founders.
And I think the last thing I would add is that we have to get comfortable and teach people the word no is not harmful to you. What it does is the word no comes with the reason why. And for me personally, what we teach our founders and the philosophy I live on with is it's on. Like, it's a mindset. Everything is a perspective and a mindset. You have to flip that no. It's on. Challenge yourself. That's what the no means. Do better.
Switch.
Just to chime in to Monique's point, no could mean not right now. I think oftentimes founders get a no email and then they write a long, why did you reject? Do not do that ever, 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 because people remember those emails. Because no could just mean not right now. You don't know what the fund is doing in their capital raising process as well. So to Monique's point, take it in stride.
Yeah, and then you just said something there, because I asked the question, again, from the founder perspective. Are the folks you raise money from equally transparent? Do you find that conversation as you just described it to me?
When you've met one limited partner, you've met one limited partner. So I don't think there's a generalization to make there. I've certainly had beautiful, transparent, productive LP relationships. I've also had other ones. So I don't know that I could generalize.
Oh, you answered that one so well. That's a great one. That's a great one. Go ahead, Dami.
We're in the process of just launching our spin out. So we are in that process of finally talking to LPs and getting the feedback. For the most part, we're getting the transparent, we're excited about this. We haven't had any no's yet, but we're still early in the process. So I'll come and get some advice when we come across that.
We take the same advice we give to our founders. When you take money from an LP, that is your permanent partner. They are your partner in business. And so for me, the same way that founders, we do due diligence on them, we also do due diligence on our LPs. What type of investor are they? Are they involved? Are they more than just a check? Will they allow us and trust us to make the decisions that we're making because we understand what we're doing based on our thesis? And so the same way we get vetted, we vet as well. And we go into partnership with people that we know we can wake up every day, the good, the bad. When the bank collapse happened, all of our LPs immediately contacted us and said, what do you need help with? That's the type of partnerships that you want, and I think that should always be across the board, from founder to funder to LP, in partnership, period.
Thank you very much. I think we're running on time, but I just wanted to, before we close out, as we think about encouraging or providing insight to those who may have an interest in becoming an investor or a venture capitalist. From your perspectives, you've had careers, you've done an awful lot across the board. What are some of the attributes, at least as you found the way that you do the business, what are some of the attributes you think would be important for people to keep in mind if they want to pursue an opportunity in venture capital?
Sure. There are so many, but the ones that come to mind in this moment are creativity. You have to have a really strong clarity of purpose. You're going to hear so many no's. That's part of it. And so having the conviction in yourself and the clarity of your own vision to continue on in the face of all those are some of the ones that I can think of right now.
Two messages. One, for investors or people considering venture capital, I have a lot of friends who are operators, kind of like me, and basically an operator is anyone that's not a VC. I don't know why we say that term, but an operator. And when they came to venture, they didn't realize how much of it is a math game, right? Like, it is finance. So I think just kind of remembering that while you can invest in friends or family members, the goal is to find the most outstanding companies that you think will really make your fund. That's one lens. And then for the founders, I think a message that I think a lot of Black and Latino founders don't think about a lot is you are the light. You're the one building the business. We are excited to meet you. We are lucky to be on your cap table. So come in with that energy, because that changes the dynamic between investor and portfolio company, et cetera. But you guys have all the magic, not us.
And the thing I would add is that business models should not be trendy or trigger words. I started in venture because I wanted to solve a problem. And I would say that for 10 and a half years, my business partner and I used our own resources, money, network, to prove our thesis before we ever took a dollar from an LP. So we did not use other people's money to make our mistakes because we made a lot of them. And so know why you're starting a fund, know what your thesis is, prove it before you go to ask anyone for anything, and be okay with that, of proving your business model first with your own resources, whatever that may be. Everything's not about cash.
Thank you guys very much. Really appreciate the conversation today. Please help me thank Monique, Dami, and Lenore for a great conversation panel today. Thank you very much, guys.
For all that you do, thank you.